is the blockbuster earnings from the big banks. All 6 big banks have now reported their results, and clearly the war, the uncertainty that the war has created, has not really damped stock trading because their equity trading desks did incredible business in the first quarter. Herman Chan is our senior analyst for U.S. banks here at Bloomberg Intelligence, and he joins us now. Herman, which bank came out ahead overall? Because they all did really well when it comes to equity trading, less well on fixed income trading. But when you look at the results as a whole, which bank comes out the winner?
Yeah, I would say Morgan Stanley probably outshined the most across the trading front, both on equities and fixed income. But overall, everything was great on the trading front. We were talking about 25% growth in equities, 11% growth in fixed income across the 6 banks. Really strong results. Fixed income, as you mentioned before, was a bit more mixed with Goldman weaker, Bank of America a touch weaker, but everybody else was really strong on the fixed side.
What are they saying about the pipeline here for business? Because it seems like this is going to be a year where we could potentially get some mega IPOs. I'm thinking SpaceX and all the Anthropics and all that kind of stuff.
Yeah. I think the IPO calendar looks a bit spottier. We have the big blockbuster names, like you mentioned, with SpaceX, potentially OpenAI, Anthropic, Databricks. Those are going to be the headline ones. But on the other hand, maybe some less activity from the private equity-backed businesses that may be finding it tougher sledding in terms of getting into the markets, given the volatility in the environment today. But nonetheless, there's going to be these blockbuster deals that are going to happen this year in our view.
And it doesn't appear that companies have held off or held back from deal making either, even with all the uncertainty caused by the war.
Yeah, that's right. M&A, at least for the first quarter, was solid, strong all the way around. On a year-over-year basis, it was gangbusters, up 68% year-over-year. So we'll see how that continues, given some of the, you mentioned the volatility is great for the trading front, less so for M&A activity and equities issuance. So it'll be a bit potentially slowing down over the course of the year.
So we heard Ted Pick on earlier today with Lisa Abramowitz and talking about the Morgan Stanley results. Man, they look pretty solid there. Is that, and the returns they're generating, talk to us about the returns these big banks are generating now before versus, several years ago.
Yeah, I mean, returns are improving across the board. JP Morgan leads a 23% return on tangible equity. And then even some of the laggards like Citigroup at 13% ROTCE, that's relative to their expectations of 10 to 11% for the year. So everybody's actually increasing their returns. It's been helped by the trading results that we saw in the first quarter. It's also been helped by stable expenses. I think AI will be a big driver of that going forward as well, with less headcount growth for the industry. But positive operating leverage, all of the top line strength is falling to the bottom line, which is good to see.
I'm glad you bring up expense growth because there's a Bloomberg News story indicating that the Wall Street banks cut 5,000 jobs in the most profitable quarter ever. How much is this an indication of what we're going to see quarter after quarter from here on out? I mean, is this the kind of pace of job cuts that we might anticipate?
Yeah, it's an interesting question. It was a question that was asked by the analysts on the earnings calls across a number of the banks that reported. I think the management teams were a bit shy to really give out concrete numbers, but AI has been a game changer, especially on the consumer side, where Bank of America gave some numbers on the headcount on the consumer side. It's come down drastically. And a lot of that has to do with areas that are more manually intensive, and also areas like the call center where you just don't need the same amount of people doing that, given the fact that Bank of America has bolstered their AI chatbot, which they named Erica. That's been driving a lot of the decline in headcount needs.
So we'll start hearing from the regional banks soon. They have a much lower exposure to the capital markets business So what are you going to be looking for from the regional banks here?
Yeah, regional banks kicked off earnings today with PNC, M&T, and First Horizon reporting. I'd say it was a mixed bag. PNC probably outshined on the lending front with strong loan growth, particularly in commercial lending. And that was echoed across the big banks as well, where they saw broader growth in commercial lending, increasing line utilization, which has been in the doldrums for several quarters given the uncertainty with tariffs last year. And then some pickup in production from areas like small businesses and the like. So that's great to see for banks like PNC. For M&T, it was a bit weaker. They did guide down on their net interest income because of less growth in consumer lending.
When it comes to the big banks, there are a lot of questions about private credit and how exposed these big banks are to potentially bad loans made directly to some of these companies. Is this a problem for regional banks?
It's also been a growth driver for regional. So it's a area that's been one of the outstanding areas for loan growth. That being said, there is virtually no concern across the management teams. I can point to PNC's CEO, Bill Demchak, that just spoke earlier this morning. He said there was a question on like where on the loss curve could private credit be in a recessionary environment, and basically said it's not on the curve. He's saying that they don't expect any losses, and he contrast that comment with what happened a few years back on the office commercial real estate front, where they were very open about their exposures and potential loss rates there. They virtually see no losses from their private credit exposure. So that's great to hear that, and they were very adamant about that.
All right, that's the message we're hearing from the banks pretty much across the board there. Herman Chan, thanks so much for joining us. Herman Chan is a senior analyst covering the U.S. banks for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive.
It's just like his
studio.
Super Bowl this week.
Yes,
He's been
absolutely.
like up at 3 a.m. every day, right?
Exactly, and that's what they do 4 times a year.